Hello and welcome to the March 2024 Industry Analyst Briefing. My name is Phil Clark. I am a consultant with a company called Embedded IT, and we work very closely with TD SYNNEX and Microsoft to bring you a summary of what's going on in the industry on a quarterly basis. And this is the quarter that ends March 2024. And we've been doing this for a number of years now. It really just focuses on the high levels summary of what's going on in Microsoft's world with a view to helping customers or partners of Microsoft react and respond to what's going on both within the Microsoft portfolio, but also within the industry at large. The general sort of structure of the session is as follows. I mean, what we're trying to do is make sure that we cover really the high level things that are going on in the industry. So corporate strategy announcement, which includes financial results, which will be covered today, but also a little high level view of what's going on with key product announcements, mainly the big ones. We don't get into all of the smaller ones because there's way too many to cover off in a half an hour video. We talk about changes in channel incentives. That's a pretty key thing these days, and I can imagine that's what most people are looking for in terms of the audience from this video. And also we get some industry summary of what's going on with Microsoft and the context of what's happening in the overall industry for things like cloud, etc., where Microsoft play. Just in terms of format, we are an independent organization. We are not looking to sell anything, so we'll give you an honest opinion. And as a result, any opinions I voice on my own. We really do focus on the key headlines only, and the content of this slide set will be made available to people who listen it or on request. And then there are links within the PowerPoint to help you click through to various news items should you find them interesting to get a bit more detail. So diving straight in, basically the big news for this last quarter has been Microsoft's Q2 results. And I think every quarter we've covered these off, there's been a lot of really good news about the way Microsoft performs. Generally speaking, they are in growth mode and doing incredibly well. But this quarter seems a little bit different, mainly because more personal computing, which is their sort of devices and Xbox brands, has grown substantially. And I think that largely is driven by the Activision Blizzard acquisition that happened or went through at the back end of last year. But beyond that, it's just all round a good news story. Intelligent Cloud revenue, which is primarily their Azure platform, is up by 20%. Office 365 commercial revenue is up by 17%. And pretty much everything's in growth other than devices, and I'll touch on that in a minute. You'll see as well there's a big increase in the operating income. There's a lot of growth around Microsoft's operating income at the moment. There's a couple of reasons for that. One is they're starting to move into more profitable product ranges, and therefore they're getting a lot more profit through the books. The other thing, there's been a subtle change in their accounting, nothing material, but basically they are looking to extend the useful life of their data centers. So the way they account for some of the costs in this quarter's financials have been really sort of changed slightly by that change in accounting process. But other than that, all round good set of results. And it's interesting, we've been doing these podcasts or videos for a number of years now, like I said. I don't think we've ever turned around and said that was a bad quarter. They are going gangbusters in terms of revenue growth, profit growth, and pretty much across the board. The strategy they set out about 2-3 years ago is coming true, moving everything to the cloud, moving away from transactional processes or transactional products. And that's worked incredibly well for them, as most people will know. Their share price, etc., is going incredibly well. Diving into the detail of each of the individual product groups for a while. So the first sort of thing to note on the productivity set of portfolio is really just the difference between the consumer and the commercial seat growth numbers. You'll notice from the ringed area on the slide, Office 365 consumer seat growth is outpacing commercial seat growth. And what we mean by that is Microsoft 365 consumers has gone up from 78.4 to 78.4 from 67.7, which is about a 16% growth. But Office 365 commercial seat growth is only 9% year-on-year growth. And so it shows that there's still a big growth in the consumer market, which is great. But it also gives you a little bit of a pointer to what's going on with Microsoft's general strategy. The commercial seat growth, which is clearly an area that's most profitable, is slowing all round. But their revenues, if you look at the top line, are up by sort of 15% or so. And this basically really shows the shift in where Microsoft wants to take their revenues. They're trying to get to a position where they've got a better mix of commercial Office 365 or Microsoft 365 type licenses that drive significantly more profit. And I think it's also a fair indication that some of the more commercial products, such as ChatGPT related, Copilot related products, are starting to come through now. So after their big investments in OpenAI for the last number of years, the profit from that and the returns from that are starting to show in revenue growth and profitable revenue growth at that, quarter on quarter. And I think that's going to accelerate as we continue through the next couple of quarters, just showing how that early investment in open AI type products and artificial intelligence type products is starting to pay dividends. And Copilot as a product set, which obviously is included in some of these numbers, is now generally available, and it's starting to grow fairly aggressively. Some people have had some reservations about some of the costs, but actually with the amount of investment that Microsoft have made in the channel, and supporting customers to make sure they adopt it, I think we'll start to see an acceleration in Office 365 commercial products, probably catching up the consumer subscribers. We're getting to a position where Office 365 in commercial is probably largely, fairly ubiquitous. So, seat growth might come down, but the overall revenues will still continue to go up as people go up the stack in terms of the different levels from a licensing perspective. So a really good news story, I think, in the productivity space, primarily just underpinning the fact that Microsoft have taken a very clever strategy to roll out artificial intelligence on a subscription basis. And we start to see some of the returns they're going to get from that portfolio over the coming quarters and years, I can imagine. Outside of that, there's a significant change in gross margin, I think previously covered. Although revenue's gone up by 13%, gross margin grew slightly quicker. And that's largely because of some changes in the accounting estimates for the way that they represent data center costs in their finances. So, nothing fundamentally different, just basically a slight accounting change that makes things look a little bit more rosy. In terms of the intelligent cloud, again, similar sort of story. That there's a lot of really good news here. 22% growth in server products overall. This is primarily focused on the Azure platform, and 30% growth within the quarter is a fairly substantial growth market. Again, sort of probably largely driven by people's appetite to embrace AI. But also there's a general uptick in the market overall. So we'll talk about the comparative market share of other peer groups in a few slides' time. But yeah, again, continuing to growth. And if you look at the Azure and other cloud services quarterly performance over the last 5 quarters, you'll see it's broadly in line with 30% year on year every quarter for the last 5 quarters. So it's generally going very, very well. Server products has grown slightly after a bit of a decline over the previous quarters. And again, I think that's largely driven by the fact that people are starting to look at hybrid models and understand how that best looks. But in reality, Azure is the main growth engine of the intelligent cloud platform, as you'd expect. Again, the accounting changes had a small impact on the gross margin figures, and I think that will continue to be the case over the next few quarters while that change washes through. The big news is really the personal computing brands, and I think there's a fairly obvious reason why this is a good news story. Firstly, there is a recovery in the PC market, as most people are aware, as the post-COVID refresh cycle is starting to kick in, and people are starting to buy new devices for their either their own use or in the office on a 3-year refresh cycle. And so the PC market has recovered, and therefore OEM revenue growth, which is largely linked to PC sales, has grown by 11% year over year. And you can see in the top line of this chart, FY23 Q2 was 39% reduction. Now it's back at an 11% growth. So that's clearly good news as the PC market recovers and Microsoft get the benefit of that. Devices revenue, so this is things like Surface, etc., are still in decline. And so there was a reduction of 9% roughly year over year in the Surface revenue. Again, that's slightly better than it was a year or so ago. But still, they're in decline. And I think that's a fair indication of the lack of focus on Surface from a Microsoft perspective as it moves more into the cloud. And then the big news is obviously the acquisition of Activision Blizzard, which went through back end of last year. Financials are starting to come into the accounting processes now. So there was a 61% increase in Xbox content and services revenue. So the Activision revenues are starting to flow through Microsoft's books, and that clearly boosted a substantial amount of revenue through the Xbox line, which made the more personal computing line grow overall, which is great news, I think, for Microsoft and for Activision, obviously. And that's also sort of flows through to the operating income line. There's a significant increase year over year in operating income, largely just showing that the Activision acquisition has worked very well for Microsoft. And I think as we want to watch going forward, as people move away from the devices revenue to see if the Xbox revenues continue to grow aggressively in support of any synergies they get from the Activision acquisition they made a few years ago or last year. A little bit of context. So we just talked about Microsoft's 18% increase in revenue, and you can see some of their industry peers here are not having such a great time. So Cisco's Q2 results were revenue down about 6%. Dell was down about 11%, HP down about 4%, HPE down about 14%, Lenovo slightly up, and Oracle up as well, but up to about 7%. But the interesting thing is all of these companies are making reference in their executive summaries, in their financial results, to the move to AI. And you can see, certainly in Cisco and Dell's case, a lot of people are looking for AI related product, AI related services. And I think the fact that Microsoft stole the march on AI a couple of years ago with their investments in OpenAI, it gives them a really good head start in the market compared to some of their industry peers here, excepting not all of these are in the same sort of direct markets as Microsoft. But it just shows, I think, that there's a real paradigm shift in the way that the IT industry is evolving. If you're not in AI, you're going to be struggling for the next few years, and you need to be catching up to those who are aggressively in AI to make sure that you've got a robust market presence going forward. Because I think it's certainly the future, and certain people are really struggling with both the combination of cloud and AI for hardware resellers, for instance. There's a lot to catch up on there, and Microsoft are well ahead of the industry thinking with regards to performance. And it's sort of reflected in their share price. There's some interesting dynamics here. Microsoft, I think, was largely priced in some of the benefits. They were on point with regards to their Q2 results. So there's no dramatic change in their share price over the course of the time here. This graph, for those of you not seen it before, shows the comparative growth in four peer stocks: Microsoft, Apple, Amazon, and Google, just to give an indication of what's going on in the industry overall. Microsoft's the black line in the middle, and you can see it grew by 8.5% over a period of time, which is clearly very good. Not as good as Amazon, which is the purple line at the top, but that was largely driven by a bit of recovery in their retail brand. And obviously Amazon, not just AWS, but a broader business, and therefore are taking the benefit in this instance of some retail performance that was positive. Google not going quite so well. I think they've had a couple of issues. I think around the revenues that they've had from adverts and the general marketing stuff. I also think Google's had a couple of false starts on the AI point as well, which has made it a little bit difficult for them to recover in terms of growth. But clearly, still a very credible threat or credible product line for everyone to stay on top of. And then obviously, Apple overall, I think a slight reduction in their share price, but there's lots of rumors going around about Apple's partnerships with AI developers over time. And I think it'll be really interesting to see what happens to Apple's share price should they wade into AI on their iPhone platform in the short term, because I think that'll probably recover some of those, make them a more credible AI player in the market. A little bit about sort of general market share, and we've been tracking this one for a number of quarters. On the left-hand side here, you'll see a chart which shows how Amazon Web Services are doing with regards to Microsoft, Google, and other cloud platforms. And the lines basically show the market share over time. And you'll see there's a really interesting dynamic that me and my colleagues have been tracking for a long time, because we're hopeful that Microsoft and Amazon will start getting a bit closer on the chart. Amazon had a 7-year head start in the cloud market. And as a result, they have had consistently sort of 30-40% market share for a number of quarters. But you'll see the line's fairly flat. They're not continuing to sort of grow their market share. If anything, it's slightly in decline. Microsoft, which is the light blue line in the middle of the chart, actually are gaining significant market share. And in a few slides' time, we'll walk you through what happens with regards to projecting that growth and see when the two lines will cross. But fundamentally, the two big players are Amazon and Microsoft. Google continuing to grow. I think their investments in their various AI platforms will start to kick in over the next few quarters. And so it'd be really interesting to see how the top three in the cloud market fare, while the rest of the market clearly has a problem to try and catch them up. And it's an actual genuine issue. We've got a bit of a triopoly developing in the cloud market that could get us into a bit of a sticky situation if we're not careful. And so I think it'd be useful to get other entrants into the market just to make sure that it keeps the big guys on their toes. And you'll notice actually Microsoft, the blue line, most of the growth they're getting, it looks like it's either coming from Amazon, who's had a slight decline in market share in the last quarter, or the others line, which is the grey dotted line. So Microsoft are probably taking on new workloads and also taking other people's workloads, which is interesting in its own right as cloud becomes slightly more ubiquitous. On the right-hand side, you can see a general trend of growth rates. And you'll see the blue line again is Microsoft, the green line is Google, and the yellow line is Amazon. And it shows that actually growth of the cloud was in a bit of a decline over the last year or so. I think that's more of an indication of people being a bit nervous about geopolitical climate and reining their horns in a little bit with regards to spending on big infrastructure projects such as the cloud migration. But people are starting to move back into spending on the cloud, largely driven by artificial intelligence. And I think hyperscalers, which have clearly got the main lion's share of brand awareness for the AI market, are doing incredibly well. And I think they get to a position where the cloud market is back in growth, or the growth rates are growing, and that just shows that the revenues are still fairly healthy there. I think the general sense is that the global cloud infrastructure services market is going to increase probably by about 20% over the next year or so. Recent figures on artificial intelligence exclusively shows that they're in the sort of 30, 40 or 50% compound annual growth rate for the next few years. So AI specifically is going to be a massive growth market, and getting involved in that from a channel perspective is very, very important. And I did say that we sort of looked at those graphs and see what would happen if we correlated those out. So, looking at the Amazon and the Microsoft lines, you'll notice if you do a 24-month trend on what's gone on with regards to market share from Amazon, they are shrinking a little bit, and it looks like that we're probably going to get a convergence of Microsoft and Amazon over the next couple of years. And certainly Microsoft are in growth mode, so you can see where those two lines intersect. If you extrapolate it out, you're probably around about early to mid 2025. And I think we were predicting a couple of years about 6 months ago, so I'm hopeful we were right there. But it'll be interesting to see how things go. Clearly, Amazon, can respond to this situation. They have made some investments in their own equivalent of OpenAI type companies such as Anthropic, and how that's adopted in a complicated market, it remains to be seen. So I'm not saying this is definitely going to happen, but there's clearly a convergence of the market share between Microsoft and Amazon. Google a little bit more flat, so struggling to keep up or encroach on the market share. Fundamentally, I think they are in a good place to do well when their AI platforms start to gain maturity as well. So the top three will continue to grow. And you can see the decline in the others line as indicated here. The intent is, I think, we're basically consolidating into three main companies in the cloud market over the next few years. And if you take the last 6 months, it's even more stark. And I think this shows quite interestingly that Microsoft's investments in OpenAI are going to start bearing fruit. Their uptick in the market share as a result of the last quarter's responses to use of AI in their product range is marked. And I think, in fairness, from an industry perspective, Microsoft have definitely got the brand awareness that maybe AWS haven't with regards to AI products and services. And so, they're going to continue to gain momentum from some of these beneficial marketing statements. And on the back of AI, I think Microsoft will continue to do very well. If you extrapolate this out based on the last 6 month trend, I think realistically by the middle of 2024, maybe back end of 2024, Microsoft will have bigger market share than AWS. But as I said previously, it's a bit of a made up number. It's just a bit of an interesting metric to see how the gap is being closed at the top. And the broader analyst community are all clearly very positive about all of the main players, but Microsoft especially. I think that there was a clear representation of Microsoft in IDC's MarketScape recent report, which showed them up near Amazon with regards to the sort of strategy capabilities, metrics, and how that they can play in those markets. And the Gartner Magic Quadrant, which you'll see on the right hand side here, which is actually the back end of last year, still shows Microsoft as being ahead of AWS in terms of completeness of vision. I think that's a fair indication of their AI platforms and how they've been taken forward with regards to integrating AI into the broader cloud set. But I think these things change over time. And like I say, I don't think anyone's writing off AWS or Google, but it's clear that there are really three main players on the cloud market. Just a little sort of change of tack with regards to the content here. I mean, Microsoft put out a future of work report in the back end of 2023, and there was two things really sort of surrounding that. One is really post-COVID, what does the world look like with regards to remote work and how things work? And they've been tracking this quite closely for the last few years because there's genuine interest in how the future of work is going to happen. Clearly, there's a lot of implications of AI and large language models on the world of work. And this report, which is the links in the slides here, really does give you an interesting insight of where Microsoft are taking AI and where they see products like Copilot in the workplace. And the diagram on the right hand side really sort of actually shows or is reassuring with regards to the impact on jobs. Microsoft's genuine view of the world in the future is that a human will choose a tool to do a task. They'll use the AI system to do that task, and then they'll check the output at the end of it. So, people being genuinely concerned about AI stealing their jobs, there's still going to be a need to have some human quality assurance and human intervention on tool selection for performing most tasks. Obviously, some more than others. But fundamentally, I think Microsoft's prediction is that there will still be need for human interaction. And things like Copilot is really designed to improve productivity and efficiency rather than replace human beings. And that's the way that it's being positioned by Microsoft. And I think that's fair to say in the way they're launching the Copilot products. It's all about trying to understand how you drive efficiencies and how you get the best out of your workforce in the context of automation and artificial intelligence. But it's a really good report. You'll see in the bottom left-hand side here, it indicates those jobs or sectors are going to be impacted most by general artificial intelligence, and it shows technology, information, and media. Our industry is clearly going to be probably the most either augmented or disrupted by artificial intelligence. The thing that's most insulated from general artificial intelligence is real estate and equipment rental. I think that's largely because that's going to be a lot of face-to-face and property facilities type engagement, which you couldn't do with the likes of artificial intelligence per se. So lots of work going into what the future of work looks like. This is a good report, but the general premise is that Copilot's a good idea, and you clearly need to take some of these things with a bit of a pinch of salt because they are designed to put across a message, which is you should go and buy Microsoft 365 Copilot, which isn't necessarily the case for everyone. But a good bit of work if anyone's interested in the content behind it. And just a broader sort of conversation about AI and strategy. Copilot clearly has been announced. It's been around for a couple of months now. There's a lot of general sentiment around what Copilot's going to do. And I think although it's still fairly in its infancy, there's some really good resources out there to help both customers and channel partners understand how they can deploy Copilot in the context of customer business processes. I think where Microsoft are trying to get to is make sure that the channel understands that it's not a product play. This is very much a business process efficiency play, and making sure that there's an underpinning message behind that. And a lot of the content links in the slides, as I mentioned previously, will drive you towards understanding what that business performance improvement is off the back of Copilot and the full suite of Copilot products. On the right-hand side, there's a link to the fact that Microsoft have launched a cloud sustainability platform, and they're using AI behind it to try and monitor people's performance in sustainability in the context of uploading information about their performance and then making sure that it gives recommendations, etc. And at the bottom, quite an interesting announcement. Microsoft have announced a partnership with Mistral AI. Now, Mistral AI are a French AI company, very much similar to the OpenAI type concept. So it feels like Microsoft are moving away from their reliance on a single LLM or generative AI partner, and trying to work with as many of the companies or the industry as possible. Mistral, interestingly, have got a lot of open source type products. So this will probably help drive innovation. There are some risks with open source, obviously, but certainly some of the models that they've got are probably a little bit more creative or inventive than the OpenAI platforms because of the open source nature of them. But they also have commercial offerings as well. So it's an interesting partnership and one to watch. I'm not quite sure where they're going to embed Mistral's product portfolio within the Microsoft stack yet, but that's probably something to come over the next few quarters. And the main product updates that we're getting from Microsoft at the moment are all about Copilot. So if you are looking for any collateral at the moment around how you should build out your product portfolio as a partner, there is absolutely loads of Copilot related stuff on Microsoft's websites. And a couple of things they're trying to call out specifically here. One is the use of Lighthouse. Now, Lighthouse is a a product that's used really to aggregate visibility of things that are going on across multiple tenants, very much designed for a CSP business. And Copilot correctly integrates into Lighthouse, so you can see what's going on with your Microsoft deployments across your base, and use Lighthouse to identify potential opportunities with your base, or people who maybe are ripe to have a conversation about Copilot. So it's definitely worth investing some time in understanding Lighthouse and integrating it into your business processes, because it's a free tool that fundamentally gives you really good insight into potential opportunities with Copilot going forward. And at the bottom, there's some discussion that has been launched through January and February around different models for Copilot in CSP. There's an additional incentive that I'll talk about in a second that will enhance margin associated with new customers going into Copilot. Clearly, Microsoft are very keen to ensure that partners onboard customers as quickly as they can. And as previously mentioned, so the bottom left-hand side here, there is a reseller incentive available at the moment, which will run through to September the 30th, 2024, and that is for a 7% accelerator for Copilot. And there are some conditions around this, definitely worth engaging with TD SYNNEX to understand the specifics around the way these incentives work, but fundamentally a 7% increase of revenue for any new customers that are taken on board associated with Copilot from Microsoft 365. So if you are talking to customers about Microsoft 365 for Copilot, then please do make sure you register for these things. It's definitely worth doing. A very specific point that's definitely worth engaging with, the Microsoft customer agreement has changed. Now, I can imagine most people are aware of this and have accepted it, but for your customers who haven't accepted it, you need to make sure you drive them to accept it by the end of April 2024. So, by the end of as soon as possible. If they've accepted the MCA before April 2023, they need to have signed up to it as soon as possible thereafter. So you need to engage your customers and make sure the Microsoft customer agreement is valid for those customers who are on the older versions, and make sure that you drive appropriate compliance in that regard. Just a little bit about sort of broader industry stuff. I mean, Gartner's done a little bit of work around what's going on in cybersecurity. I think there's generally a concern around the way that Gen AI is going to impact cybersecurity. And certainly Gartner's view in terms of the trends that are likely to be happening in the cybersecurity world, Gen AI is trend number one. But I think people are asking the questions what it actually means for cybersecurity, largely driven by, does it improve the quality of phishing attacks? Does it automate things like that allows people to it exposes people to social engineering and those sorts of things. Beyond that, there's lots and lots of other things going on in the world of cybersecurity. I'd recommend you read this report if you have an interest in that sort of thing. It basically summarizes that there are probably two main things that people are worried about at the moment: impact of AI and impact of cyber on the end customer estate. And so if you are well versed in how to respond to those things, then you'll be in a really good place. And there's a little bit more detail in the report referenced at the bottom. 5 big things to know about CrowdStrike. CrowdStrike do a threat report every year. And so they've noticed a couple of sort of key takeouts. But the main one that worries me the most is breakout time, i.e. how long does it take for a hacker to get from one position to another within a hacked network. And that is clearly a concern for anyone who's trying to manage multiple domains. And so certainly worth understanding that in a bit more depth if you are representing security for your clients. The other thing that's probably a little bit more concerning is that Gartner's predicting that there'll be some concerns around general margins. There's a lot of discussion at the moment, primarily driven by the current macroeconomic climate, that companies might be shrinking their margins over the next few years. And on that basis, it's highly likely that the impact of investment in technology, there will be an impact in investment in technology. I don't think it's the end of the world. I think technology is always fairly high on the agenda with regards to investment, especially with things like AI and efficiency. But there is definitely things that need to be considered when positioning sales to CFOs. For those of you, who are trying to sort of get business cases through, definitely worth understanding the return on investment to try and make sure that your CFO stakeholders are signed off on the projects that are coming through. And you'll notice on the right-hand side, the general market conditions for tech providers is, there is a lot going on with regards that you've got to do some stuff now. There's a sense that there's a growing market in AI safety and some of the other sort of responses to the situation we're currently in. and that's sort of taking more priority over some of the other sort of lesser concerns, such as biopessimism, you know, cloud market involvement, etc. So lots of things to consider as a channel provider. In summary, I think you need to be really aware of AI, you need to be really aware of security, and you need to be very good at articulating your proposition such that people who are looking to pull their purse strings in will be able to have an appropriate business case for any investment you're looking to make. A couple of other sort of slightly more positive things, though. I mean, generally speaking, there is a drive towards the channel. I think all of the vendors are starting to realize that the value of the channel is in helping articulate some of the more complex things, such as AI or cybersecurity related products. So the channel is being invested in by the main vendors, and training being a good example. There is a significant reliance on the channel, and it's going to grow because as mass adoption of things like AI is going to be required, then the feet on the street to actually sit down and have a conversation with a customer about what it means will become more difficult for vendors, and therefore embracing the channel and driving through the value in that context would be good. And as a channel partner, it's definitely worth ensuring you've got both a clear understanding of your customer's industry, but also enough capacity to sit down and have a proper conversation about how these technologies can be used such that they can get the most benefit out of it. On the right hand side, a little bit of review by Canalys, Canalys, with regards to the MSP market. The ones that we're driving out here, compliance consulting services. I think that's an interesting one. I think that's definitely going to be something that is AI related and broader. There's a lot of new regulation coming through both in the EU and in the UK relating to IT. So definitely worth understanding how that works. I also think there's a big market for compliance to sustainability metrics. And so as a business, it's definitely worth thinking about how you can get consultancy as a portfolio item into your world to drive revenues and make sure you're offering the right advice to clients. Because if you're not doing it, somebody else is. And the other one we've pulled out is managed detection and response. Again, cyber related, but ensuring that you as an MSP have got MDR services correctly built into your world. Significant growth in this world. And I think as the cyber threat increases, the MDR services will become more and more critical, and therefore the value that you're offering and probably the margins you can make will grow appropriately. Just a little plug for the broader sort of TD SYNNEX podcast. So we Embedded work very closely with TD and do a podcast. There's probably episodes out every couple of weeks, and we talk to Microsoft and partners about the way the Microsoft products are being embedded into their solutions, and some of the other things that Microsoft want to announce through that forum. So please do subscribe. The links here. You'll see there's a whole raft of things on there that cover from sustainability through security through to Copilot and those sorts of things as well. But in a nutshell, that is it for this quarter. I hope you found that useful. We're very keen to understand how you like these sort of videos, so please do feedback. If you think the content is good or it needs some evolution, then please do get in touch with your tech data, your TD SYNNEX CSP team at csp.uk@tdsynnex.co.uk, or feel free to reach out to me, phil.clark@embeddedit.co.uk, and we'll make sure that we improve these services over the course of the next few quarters. Thanks very much.